Welcome back to the channel. My name is Patrick, and in today's video I'm going to give you a bit of an update in terms of my progression this year so far. So at the beginning of the year I set out with one objective, which was to find consistency in my trading. In this most recent attempt to do so, I was able to pass this evaluation stage of the 5%ers high stakes challenge account within 3 trading days. I'm going to show you the statistics to back this up, and then at the end of it, near the end of the video, I'm going to show you some of my trade setups. Okay, so I started this account on the 16th of May. Okay, so on the 16th of May, and 3 trading days is complete. The objective is to hit 8% without breaking some rules. You can't lose more than 5% on any given day, and you can't go under the 10% maximum drawdown, and you need to trade 3 minimum trading days. Okay, so I was able to hit all the objectives without breaking any of the rules, as you can see here. 100% hit the 8% profit target without being stopped out, daily stop out or maximum stop out, and I did the 3 minimum trading days. Okay, so statistics, as you can see here straight away, it was quite steady. Okay, from this, so that doesn't really tell us much. So let's look at the advanced statistics here. So trades, it says I took 15 trades and all of them were profitable, so no losses at all. 100% win rate, that's what that means. Okay, so by far this has been my most consistent performance ever. Okay, so at the beginning of the year I showed you 3 setups I like. I've been working with 2 of them most of the time, and then the third one I really have been focused on it. I looked at it and I really like it, and that's what I've been trading last few days, last few weeks, and as you can see, it's found me the consistency I've been searching for. So I do now need to be disciplined. I do need to wait for the setup, because when I do wait for the setups, this is what happens. I'm going to show you what that looks like in terms of the trades I took in a second. Okay, so best profit was $600, so that's roughly about 6 pips, sorry. I was using about 10 standard lots, 6 pips on most of the trades. I was not asking for much. I am risking a bit too much, but I was not asking for much in terms of TP. Okay, so I do need to address my risk management. I do know that, and moving forward is something I'm going to be focusing on in the future. My 2 major problems is over trading and over leveraging. Here, as you can see, I've been working on my over trading. I reduced to it. I was doing maybe on average 3 trades a day. I was trying to do that, and then I think the last day I did more than 3 trades. So I've been working more on my over trading in this past few days, and now I need to adjust my over leveraging. Okay, so that's the next step. So let's see, largest pip win was only 8 pips, and the duration was 31 minutes average duration. So I was not in any moves for long at all. So that's it for the statistics. I'm going to jump over to the charts. I'll show you now some of the setups and how they played out. Now, the reason I'm sharing all of this with you is because I want it to serve as a reminder to myself. Okay, so I want it to serve as a reminder, show me what I can do if I am patient, if I am disciplined, and I wait for my setups and trade only my setups. This is what could happen. Okay, hopefully you find benefit from it as well, and if you do, hit the like button and support the channel. Okay, let's head over to the charts. Okay, so I've got a few examples I want to show you. You can view this on any time frame. I prefer looking at it on M5. It's what I've trained myself to read, and I'm going to show you some examples using M5. Sometimes this setup's available on M1, but M1 just gives too much information. It's harder for me to read it. Okay, so this is it on the Euro, EU. So I trade it based on EU, GU, and USD Swiss. Okay, so this is the move here. Okay, So I want a little trend going in one direction. That's a 1 minute trend. It then breaks structure here, and then to continue its trend, it needs to respect this low and push higher, which it does. Cool. Then it needs to pull in into this zone again to respect this trend and go up. It needs to respect this low now, and from this point here, push higher, which it doesn't. It actually continues pulling down and then breaks the structure. Okay, so this is my first indication that price wants to reverse and go into the other direction. Okay, so for a reversal, you need a breaking structure. You need a fake breakout. It needs to be in a particular zone, whether it's a supplier zone or a demand. If it's in a supplier zone, you're selling. If it's in a demand, you're looking to buy, right? So we are in a supplier zone. We had our fake breakout here, our first breaking structure there when it beat this low here, and I'm looking for price to pull back up into that zone and then take my move, my entry from there to take it down. Okay, so my stop loss would be just above this high here, so that's my risk. So from this pivot point here, it's 11 pips, and if I wanted to take a one-to-one from there, I could have got 11 pips back there. Okay, so on this leg out here. Okay, so that would have been one-to-one on this move here. You could do one-to-one. You could definitely hold the move. As you can see, it runs further. If you held the move, you could have got 52 pips from that one move. If you held it for one-to-one, you could have got that. You could have held it for two-to-one, you could have got that. I prefer just to hold it until it creates this third leg out here. So in this situation, it is a one-to-one. In some situations, 6 pips. Some situations, 4 pips. I'm not interested in seeing how far it goes. I want to get what I came for. I get out. Okay, so I tend to use a little bit more size, so I do risk more than 1%, and I tend to make 1% on my moves. That's how I'm able to progress so fast, but it's something I need to reduce because there are instances where it does not work. So if I'm over leveraging on every single move, when it does not work, I'm going to find myself in drawdown. I know I could get out of drawdown using this strategy, but do I really need to be in drawdown all the time, creating an emotional reaction? I'm not sure about that. So it's something I need to work on in the future. So this is the move again. So fake breakout, a pole, a flag, a pole. When price returns to that zone that created that first pole, I'm looking to enter, and I'm looking for a pivot point. So it could be under this low, it could be this low here, or it could be this low here. Okay, I typically try to find the closest low that price could react to. So as you can see, it reacted to this low and it reacted to that low, but my entry would have been based on that low. Okay, so drawdown, there wasn't much. It was only about 2 pips. You could have placed your stop loss on over here. So people who trade with a higher leverage, they would have placed the stop loss over here. So I think that would have been my stop loss. But that's why I'm able to take. So this is 6 pips. I'm looking for 6 pips. That would have been my one-to-one. Okay. Best place to place your stop loss is at the start of the move. Okay, because price could come into that zone, tap it multiple times, even tap here multiple times before it moves out. Okay, so that's one example. Show you some more. So on this day, there was actually 3 examples. There was 2 I liked and 1 I didn't. So it's actually, this setup is visible in almost every single session. So this is the Asia session, this is roughly the London session, and this would have been the New York session. Okay, so here in the Asia session, we had a little trend on the 1 minute. It pushes up here, it pulls into this zone. To continue its trend, it needs to beat this high. It doesn't. It holds here and then breaks this low, breaking this low. So that's a reversal. Okay, so once it breaks it here, it pulls back up just to that pivot point there, Let's just zoom in. I know I can see it, but you probably can't see it as good as I can. So it pulls back just to that pivot point here where it led to the breaking structure. Taps it once, taps it twice, taps it 3 times, then it pushes out. Now, if you wanted to trade this, stop loss above here, that's about 5 pips. So 1 to 1, you would have got your 5 pips out there. And if you held it, you could have got 15 pips. So you could go 1 to 3 just on that move there. Okay, I didn't trade that. I traded this move back up. So this move here, if it wanted to continue its trend from here, it pulls here, it flags up, it pulls here, it should flag up here and go again. It didn't. It pulled up here, held and pushed up, breaking this high here. Okay, so that becomes our key area. So we then have our fake breakout here, a first pole, our flag, a second pole. We want price to come back here. It doesn't. It just pushes out. It's quite aggressive. Creates a third pole here. So my entry is now based on this pivot point here. Okay. So you could have caught it on this pivot point if you were fast enough, or if you were looking at M1, you would have seen it, because you can see price here pulls in, just touches it there. But if you didn't, you could have caught it on this pivot point here. So it touches it once, it touches it twice, and it goes. Stop loss, again, could have been under this low here, and you could have risked only 5%, 5 pips, gone to a 1 to 1, or you could have left it here, which would have been the best place to step, left it at 14 pips is a risk, and you could go 1 to 1 as well. You could go 1 to 1 from either entry, and wherever you left the stop loss, you could have got 1 to 1 from it. Okay, so that would have been my move there. And then on the reverse, on the New York session, again the same thing. Here's our low, a fake breakout here. If it's continuing this trend, it's meant to pull in here and go out again. It didn't, so it's held there, and eventually breaks this low here. So that becomes our pivot point. This is where price decided to break out and change directions. So that's our fake breakout, that's our first pole, that's our first flag, that's our second pole. Okay, this low here. So when price pulls back up to that pivot point here, as you can see, it touches it once, 2, 3, 4 times, then it goes. Okay, so this is how I trade with the trend. This is my setup. This is what I need to see before I can take this trade. So again, risk here is 16 pips. 1 to 1, beating this low here is 21 pips. Okay, held it a lot longer, and price has moved a lot further than this, by the way. So held it, you could have got 34 pips, so you could have got 2 to 1 there. Me, I'm usually typically stop loss is roughly around there or the last high, so I'm looking at 10. I'm risking 10 pips here. I'm out at 6 pips. I'm happy to leave, get out at 6 pips. I do not need much at all, especially with the size I use. I'm not sticking around. So 6 pips from that entry point there, I would have been out just there. Okay, just there. So I'm not asking for much. That's why my moves, 5 minutes duration, I'm out, I'm done. Okay, so there was 3 opportunities that day. I think I got 2 of them that day. I didn't trade the Asian session 1. I know that. Probably got this one, and I got it on another pair because I didn't trade New York session either. I looked at it. Actually, no, I did. I took 6 pips here. I took 6 pips here. I didn't hold it to break this low. That's what I didn't do. I just, when it pulled down here, it came here, tapped it again. I took the 6 pips here. I can't show you my executions because this is a new account, because I passed the last evaluation stage. So I have no trade history on this account. Okay, so here we go. This is a good example of it not working. So yes, I got 100% win rate, but does it work 100% of the time? Does it work all the time? No, nothing does. Anyone tells you otherwise, it's a scam. So this isn't 100%. So we have our trade, we have a trend here, and we have our push up, potentially our first breakout. It's meant to pull in here and go again, but it doesn't. It came and it smashed this low, smashed this low, smashed this low. So I'm thinking this is a strong reversal starting. So I mark up my entry here. I want price, it's pushed down. I want price to come back up here. So this was my fake breakout. This was my first pole. This will be my, actually, so this is my first pole. This is my first flag. This is my second pole. So I want price to pull back in here and pull out again. Okay, so that's how I read that. Looking at this again, as you can see, it don't work out. The risk was only 9 pips, and yeah, it didn't work out anyway. So this doesn't work out all the time. I do believe I took a loss on this. I'm not sure. Oh, I didn't trade it. Actually, I didn't trade it. I was on a different pair having a look at it, and I saw this and I didn't like it. I think I took it on GU instead. Now, why did this not work? Well, looking at this again, it pulls back up. So it pulls out, right? But it didn't use this pivot point. I like to see it pull out here, pull out, come back, use this pivot point, then go to create that next leg out. Okay, so this would have been our first pole. This should be our first flag. Pulls out here, pulls in, and goes again, but it didn't. Okay, no excuses. It's just a misreading. I read it there, it would have been wrong. I read it here again. You could have got something there, but not much of a move there. Okay, so I think maybe I took this, but I didn't take that because I took it on a different pair that day. But this is just I was just looking back at this and I saw this, and this is a good example of it not working. So I just wanted to show you that I obviously didn't take it because I had a 100% win rate. So I didn't take it on this pair that day, but it was just a good example of it not working. So nothing's 100%. You can see the setup or misread it and it may not work. That's why it's key not to over leverage. Okay, so let's get back on this. So a trend here, to continue this trend is meant to pull here, push up, come in here and go again, but it didn't. It faked up, broke that structure straight away, pulled up and broke a lot of structures. Exactly the same thing we saw in the other example, but this time it pulls up, holds on this pivot point and breaks down there. Okay, so I saw that my entry would have been based on this low here. My ideal stop loss, my preferred stop loss would have been here. Okay, yeah, 12 pips, but I know that this is a massive gap here, and this pivot point here, price could come back to that pivot point there. So my stop loss would have been above here, which is the best place to place the stop loss. So in this situation, that could have been 30 pips. That would have been my ideal stop loss. I did not use that, obviously. So I probably had a stop loss over here. Looking at that, there's no way I had a 30 pip stop loss using the lot sizes I used. So I would have had my stop loss above this guy here. So after this break, my entry is there. My risk was 13 pips. And I'm looking for a leg out here, and 6 pips would have done it for me. So I got it from here. I got it from there. And as you can see, it ran a lot further, gave a 1-to-1. So if I did have my stop loss here, risking 30 pips, and I use appropriate risk for that 30 pips, I would have got that 1-to-1 there. Would have got 1-to-1 there, and as you can see, it ran all the way further. It ran all the way down to 61 pips. So that's another example. I think this was the previous week. So this is an example that I traded the last few days, but that's just another example of the setup working. So I showed you a few times what the setup is, what I trade, how it works, what to look out for. It's not 100%. But it is very consistent, and you can find this setup on a daily basis. Hopefully this has been useful to you. If it has, hit the like button, support the channel. This is Patrick signing out, and until next time, peace.